morning, folks. My name is Rich Harding, Rail Logistics Coordinator here at PFL. We hope everyone had a great weekend. Dow closed higher on Friday of last week, up 658 points, but down 49.89 points week over week. S&P 500 closed higher on Friday of last week, up 72.78 points, but down 36.2 for the week. The Nasdaq closed higher on Friday of last week as well, up 201 points, but down 182.9 week over week. Well, we finally had a good day on Friday, folks. In overnight trading, Dow futures traded higher and expected to open up this morning 256 points. Oil saw another hugely volatile week of trading, which saw prices at one point wipe out all of their gains since Russia invaded Ukraine. Earlier last week, a report showed that U.S. inflation rose to its highest in 4 decades, while high U.S. gasoline prices are starting to take their toll on consumption. Oil ended the week below $100 for the first time since early April, after another volatile period of trading last week marked by escalating concerns over an economic slowdown. WTI for August delivery rose $1.81 a barrel on Friday of last week to settle at $97.59 a barrel, but down $7.20 per barrel week over week. Prices were down 6.9% last week overall. U.S. commercial crude oil inventories increased by 3.3 million barrels week over week. U.S. crude oil inventories are 5% below the 5-year average for this time of year, and that seems to be a trend. Total motor gasoline inventories increased by 5.8 million barrels week over week and are 5% below the 5-year average for this time of year. Distillate fuel inventories increased by 2.7 million barrels week over week and are 18% below the 5-year average for this time of year. Propane and propylene inventories increased by 2.9 million barrels week over week and are 12% below the 5-year average for this time of year. Propane closed out the week at $1.17 per gallon, down 5 cents per gallon week over week, but up 18 cents per gallon year over year. Oil is higher in overnight trading, and WTI is poised to open at $1.72 a barrel from Friday's close. Total North American weekly rail volumes were down 3.5% in week 28 compared with the same week last year. 7 of the AAR's 11 major traffic categories posted year-over-year declines, with the most significant decreases coming from petroleum and petroleum products, down 12.8%. Other was down 7.9%. Grain was down 7.6%. And last but not least, metallic ores and minerals was down 7.1%. The largest increase was from non-metallic minerals, up 4.7%, and chemicals up 4.6%. North American rig count was up 20 rigs week over week. U.S. rig count was up 4 rigs week over week and up by 272 rigs year over year. The U.S. currently has 756 active rigs. Canada's rig count was up by 16 rigs week over week and up by 41 rigs year over year. Canada's overall rig count is 191 active rigs. Overall year over year, we are up 313 rigs collectively. That's a huge increase, folks. We are watching a few things out there worth noting. A railroad meltdown seems to be underway. Folks, we all know that the Class 1s cut way too much on the slot of the pandemic. We also know that service has been terrible. Also, certain shippers have been asked to actually store cars. New service is incredibly difficult. Even though the railroads offer an attractive salary, does not require a college degree, and on-site training is provided. Hours of work that are being asked to work are taxing on railroad veterans and their families. New hires that are trained up are quitting on the back of the long hours they have to put in. Railroad unions have been negotiating with their respective Class 1s since January 2020, resulting in no deal. Union workers must receive federal permission to strike, per Railway Labor Act guidelines and past court decisions. Now, President Joe Biden is being charged with appointing a presidential emergency board to nail down a new contract. If he doesn't do so by today, railroad crews could legally have their first nationwide strike since 1992. See PFL's Rail Report for further details, and stay tuned to PFL. We're watching this one closely. We're also watching transportation trends including trucking, global, air freight, and containerized ocean traffic. See PFL's Rail Report for further details. In addition, we are watching the Russian Nord Stream pipeline. Is Canada going to send repaired turbines for the pipeline? Justin Trudeau wants to. See PFL's Rail Report for further details. We are watching our energy crisis. Well, folks, the worst is not over according to the IEA. However, hedge funds are increasingly moving out of oil amidst widespread recession fears. Hedge funds and other money managers have been liquidating their oil positions at one of the fastest rates in the post-pandemic period, selling a total of 201 million barrels in the past 4 weeks. See PFL's Rail Report for further details. The reading of PFL's Rail Report today is an absolute must. Not only do we dive into more detail, as discussed in today's podcast, we also summarize the latest petroleum by rail numbers, talk about refinery runs, overall petroleum import and export numbers. Bottom line, a lot of great information, a lot of fancy graphs. We hope that you enjoy reading PFL's Rail Report today. We do it all for you, folks. PFL has been extremely active in railcar storage, return on lease strategies, subleasing, mobile repair, flaring, and cleaning. Make sure to check out our just posted reports at pflpetroleum.com or call PFL to troubleshoot any question or concern you may have at 239-390-2885. Thank you, folks.